What's up, party people? Feeling good this morning. Thought I'd get right back at it and do a YouTube because I don't think I was able to fully appreciate how amazing the forward earnings were and the commentary on the conference call. And I think the stock is massively mispriced. And I am going to walk you through why. So, the first thing you have to understand with forward, as I've said many, many times, is that this is a massively levered company. Something like one turn of EBITDA is an $8 change in equity. Okay, so incredible amounts of sensitivity. Sorry, I'm just trying to put on my focus here. Incredible amounts of sensitivity to EBITDA multiples. So with that in mind, any operating leverage in this business is going to make this stock go up or down a lot, right? And in some ways, the equity itself is being priced as a long-term option. Okay, that's because if EBITDA goes from 300 to 200 from 300 to 200 to 250 range, the equity might be worthless. If the EBITDA goes from 300 to the 350 to 400 range, the equity might triple. Okay, so people are hanging on every data point with every quarter to make sure that the business is not deteriorating any more rapidly than it was the previous 2 years. And it seems like you can say with pretty good confidence that the business has stabilized, right? EBITDA is just hanging in there at the 75 range, even ticking up a little bit. And revenues seem to have stabilized from a quarter over quarter standpoint and similar declines from year over year. And mind you, this can't be said enough. We are in a trucking recession. Okay, now I don't know when, if or when we ever got out of a trucking recession, but as cyclicality goes, it has to come out of it at some point, right? Whether that's next year, 2 years, 5 years, companies go bankrupt, trucks come out of the system, whatever it takes to make it to where there is then enough demand to increase price and to increase volume. Though the increased volume has to come from the consumer and from all the rest of that kind of bullshit. That's nothing really to do with the supply of the trucking industry. But I am not a trucking expert, as I've told you many times. But anyway, the question here is, what is this business worth today given the cyclicality lows that we're at? And if you do a sensitivity analysis of 9 times EBITDA, 10 times EBITDA, 11 times EBITDA, your range of values goes from like 22 to 40 or whatever, 25 to 45. It's that extreme. And that's with the depressed 300 million EBITDA. At 350 or 400, instead of it being $8, per equity, for $8 a share per EBITDA turn, it's like $10 a share per EBITDA turn. So the history here is pretty straightforward. You've had multiple activists, and you've had the entire management team thrown out, and you've had the entire board basically turn over in the last 2 years. Okay, and all the bad actors are gone. Okay, on the board you have I think it's a 14% holder who was the former Omni majority holder from the ill-fitted merger, and the other Omni private equity owner is gone, left at the end of August. We don't know why he left in the middle of the process, but he's gone. Okay. You also have Clearlake, which owns about a 10% stake in the company, which is a massive private equity firm that has been vying to bid for this for 2 years. And we're fairly confident that they're still involved in bidding for this, along with Apollo, as recently as a month ago. And the only news we've gotten from Articleville is that the company has been looking for a $40 price, around $40, and bidders were far off from that $40. And they're nowhere close to an agreement. And that the company is talking to strategics now, okay? I think it might have said reached out to strategics, but I don't know what language Axios Pro used. So what changed yesterday, 2 days ago? What changed 2 days ago to me is that the company did not have to comment on the strategic process this quarter. They could have just said what they said the previous quarter, which is that they're not taking any questions on it. It remains ongoing, yada, yada, yada. They took the initiative to really make strong comments about the strategic process. And this paragraph is the most important one. Over the course of this review, we've had discussions with multiple interested parties, and discussions are continuing. Well, we know they had discussions with multiple interested parties. That part's not interesting. But discussions are continuing. Okay, it hasn't stalled, that's for sure. We conducted appropriate proactive outreach to interested parties. Along the way, other parties have also initiated dialogue with us at different points in time. Obviously, we welcomed inbound inquiries, the timing of which was out of our control and has contributed in part to the length of this review. The review to date has been a thorough, inclusive process to explore all available opportunities to maximize value. The process has and continues to include the evaluation of a potential sale, merger, or other strategic or financial transactions relative to the long-term value potential of the company on a standalone basis, as well as a review of the components of our portfolio to ensure that there's a long-term strategic fit. Our board is taking the time it needs to be methodical, thoughtful, and comprehensive to ensure that we pursue the best possible outcome for the company and for all shareholders. We do not intend to disclose further developments unless it is appropriate or necessary for us to do so. And our policy is not to comment on rumors, and we will continue that policy. And they ask for you not to talk about or ask any questions about this today on the call. Of course, people did ask questions on it, and the only really interesting question was, hold on. Someone asked if it's gone long. Am I not going to be able to find this here? What did I do wrong here? I don't know how to find this. I don't want to waste you guys' time. But someone asked basically, is the reason why it's gone long because of the inbound process? And he basically said, I don't want to give you the opinion, what I'm trying to say here. He didn't want to make it seem like that was the only reason why we're still doing this, because they've had recent inbound interest. But the important part to me is that far from them being in a position of weakness, it seems to me that it seems to me very clearly that they ran the process with the private equity firms. Maybe didn't even do any outreach to strategics, given the fact that there's two parts of this business and it might have to be split up to sell to strategics. They had a robust first round with 5 bidders. And then when push came to shove with the final 2 bidders, they didn't get the price that they wanted, whether it's they wanted 40, whether they wanted 37, whatever it is, 35. The bidders did not hit that number. Maybe they bid 30, maybe they bid 28, maybe they bid 31. But to me, it seems almost certain the bidding was not 25, okay? Especially given where the stock was over the course of July, August, and September and October, and given what the numbers were this quarter. So one bear case for this to me was that the bidders got the August and September preliminary numbers, and they didn't like what they saw, so they took down their bids from wherever the first round bids were, which were thought to be in the lower 30s, which makes sense. The stock was trading 28 to 31, 32 the whole summer or the second half of the summer and in September. We now know that's not the case. We know the numbers were fine, if anything, slightly better than fine, and versus expectations. And there's no reason for them to have lowered their bids from that first round. Okay, so the stock went from 28 to 18 when people thought the process was going too long. I thought the process was going too long, and that earnings were going to be bad, and the total, worst case scenario, which is process dead, bad earnings, bad operating leverage, chance for bankruptcy and defaulting of the debt at some point if they hit their 6.5 and then eventually 5.5 times covenant ratios in the next year or two. Okay, and it's a 0. Okay, so the stock went to 18. The stock went to 16 at one point. Okay, where are we today? I think we're in a stronger position today than we were in July, August, or September. Yet the stock is 21 and not 28. And I think people are anchoring on the $18 stock price and not looking at this from a much more kind of 10,000 feet view of what has been going on from a time-to-time standpoint. Today, we know quarter 3 earnings. We know quarter three earnings were better than quarter two earnings. And it's another sign of stability in the business. Okay. Today, we know that they're still engaged with multiple parties. Okay. We didn't know that for sure until today. It could have been basically a stalled process. Okay. And finally, today we know they're probably involved with strategic on top of being involved with the private equity firms. Oh, and did I mention that one of the private equity firms owns 10% of the company already? Right? They're already kind of pregnant. Now, that's not a huge stake, right? They're not going to throw 90% after 10%, good money after bad money, just to do it. But this is a good business for private equity. Okay, it has everything that they like. Okay, it's asset light. It has you put a lot of debt onto it, and it's currently at cyclical lows. So that when the cycle turns, there's going to be massive operating leverage. Okay, so huge returns to equity based on buying this at the right time. You could also do tuck-in acquisitions, whatever. You could break it up. You could sell the two businesses to two different strategic partners. Okay, so to me, all outcomes lead to a higher stock price. Okay, even in a break, which I don't even think is even possible. In a break, the business is showing me growth and stability. And I don't think you'll get a break here. We would get a break here until February when they report the next earnings number. And I would think that they would do that in conjunction with putting up a good number. Again, they can't read the future, but we're already, 5 weeks or 6 weeks into this quarter. And they specifically said in the call, quarter four is looking like quarter three. So I'm not worried about that. So I put a 10, maybe a 15% chance the process breaks. And I do not think that means the stock's a zero or it goes down a lot from here. Okay, we're not at a $30 stock price. So then you have to ask yourself, what happens in the other 90%? Well, the other 90% is crazy blue sky outcomes. Okay, maybe 2/3 of that outcome, maybe even more, like 75% chance of that outcome, is one of the original private equity players eventually comes to to agreement on price, and that could happen any day now. They had to report earnings, they had to clear the air with the quarter, and they could go back to that group or groups, whether it's Apollo or Clear Lake, and bridge the gap between whatever their bid is and what the offer is, because there's a ton of debt on this fucking thing. So again, $8 is a one turn of EBITDA. I would think that they can figure out a way to bridge even an $8 gap. So what price would that look like? Well, again, I think everyone's anchoring on where the stock's trading and where it was trading last week, not where it was trading in the summer and in September, and what it's worth, right? It probably is worth 10 or 11 times current EBITDA, given you're buying it at a trough EBITDA, okay? I saw a note yesterday that says it's trading at 8 times next year EBITDA, which is like they have EBITDA going up to like 350 or something from 300, which maybe it doesn't. You have to have some sort of cyclicality, I hate that fucking word, cyclicality bounce. I know it's not cyclicality. Shut the fuck up. So to me, that's your 75% chance of the 90 that they agree to private equity. And honestly, I don't think it's going to start with less than a 3. 30, 32, 33, something like that, 34, okay? I don't think anything's changed from going back to August and September. Just price. And people think that means private equity won't pay up for it. People forget the stock was trading at $15 to $18 in May. And it started going up after there was clear they were making progress on the process. So private equity is not anchoring to where the stock's trading today, okay? There's so much leverage that the EV barely changes from 27 to 33. So that's your first outcome, I think. Private equity buys them, starts with a 3. I think in the worst outcome, it's like a $27 deal. Not even a $25 deal anymore. I don't see how it's possible. But you use whatever numbers you want to use. So I'm going to use an expected value of $30 a share if private equity is the buyer. Okay, that runs the gamut from whatever, 27 to 35, and weighted averaging it at 30. But then you have this chance that strategic ends up buying them, right? I don't think strategic just, fucking around here. I think they really are negotiating with at least one strategic partner. And they could pay well more than whatever private equity could pay, right? They have synergies and all this other kinds of shit, okay? So let's say they pay $40 a share, okay? use whatever number you want. I'll use 35 for that outcome as my expected value. It's higher than that, okay? So that's 25% 35, 75% 30. You put those things together, it's like 3150. That means I have a 90% chance, I think, of 3150 happening, okay? What do I need for the 10% break outcome to have it being a buy right now, right? In my 10% break outcome, I think there's a better chance than not that the business is doing better and it's worth more as a standalone than what the private equity was willing to pay. Remember, private equity wants to have 20, 25% returns after they pay the premium to us. So, there's a non-zero chance that they just don't sell this thing. Now, I do think they really have to sell it. I think given the way this has transpired, that the holders of the stock are all in it for a sale. And even the two sell side notes say sell, sell, sell. It's Jeffries and somebody, I can't remember who the other person is. But they both talk about saying a sale is the best outcome here. We want a sale, da da da. So I don't think it's bad it's gone long. I think it's odd. I thought it was odd. But, they're not under any kind of time restraint like we are with options or whatever. So to me, they hold all the cards. And Apollo and Clear Lake aren't going to change their mind unless, the business changes or macro changes, which, I mean, they both can. But it's okay if it takes an extra 2-3 months for them to vet strategic. And let's be honest, we know what they're doing here. They're trying to get a legitimate bid from strategic so that Apollo and Clear Lake come up. Because it's more hairy selling to strategic with antitrust and maybe having to break the business up and whatever. So the good news here is that the private equity firms have already done all their due diligence here. It's over. So you can come to agree. This is not a complex thing like BHF with insurance regulators and all sorts of other kinds of shit, Middle Eastern money. They can come together on price within 72 hours, right? The financing's all lined up. I'm sure the merger agreements are all written. You do that all in conjunction as you negotiate. And yeah, I think this could happen anytime in the next 90 days, most likely in the next 45 days, would be my guess. And I just think the market's getting it massively wrong. So look, the where you get hurt here is in a really bad macro tape. Even though the trucking industry is already suffering, obviously if we go into a recession, it's going to be worse. So, I'm not hedging it, but there's plenty of ways I'm sure for you to hedge this if you wanted to. All right, I was going to talk about Grindr and I was going to talk about YEXT, but I'm going to save that, I think, till next week since this is already a pretty long video. I really like Grindr here. I made that a 20% position, delta adjusted position. I think the quarter was great, and I think that it removes most of your downside risk in the next 3 months while they figure out whether they sell to the majority owners. I'm not so sure they'll be able to sell it at $18. I couldn't believe it when I saw how much stock they bought back in the last 3 and 9 months. I had no idea. Basically, they paid $17.94 for over 10% of the outstanding shares in the last 9 months, and they're buying back 4% a quarter, 4% of the outstanding shares a quarter. And if they paid $17.94, you can't agree to sell to your majority shareholder at 18 because they thought the stock was undervalued at $17.94. So they're going to have to pay up there. They might have to pay 19, they might have to pay 20. It might just end up being public, staying public. But one way or another, the stock's going higher, I think. So I really like Grindr. I think the quarter's super de-risking there. And with YEXT, that's imminent, I think, by earnings the first week of December. That shouldn't be too complicated. At this point, they've already reached out to all the potential buyers. My guess is most passed, if not all. So all that's left is coming to an agreement with the management team and getting a fair premium. And as I've said many times, I don't think you can do it for less than $10. That's a less than 25% premium. And I still expect that to be what happens. It's a $10 deal with the management team. And if we get lucky, there's a third party that came in and is willing to pay up more. But the business is barely growing. It's a flat top line. This AI story that is a show me story, and it's just not that sexy of a business. So I wouldn't be surprised if nobody else is interested. But the management team saw something, and that guy's really smart. So I guess I ended up just doing Grinder now, and I guess I did YEXT now. All right, everybody have a great weekend. I'm still on cloud 9, and over and out.